Thank you for joining the presentation by NeverLossTrading. Learn to trade, it is never too late. It will be an exciting presentation helping you on board into the world of trading for success. Let me introduce myself. My name is Thomas Barman. I'm the inventor of the NeverLossTrading systems, and I wrote 2 books that I published with Kindle and Amazon. You can please go through the disclaimer over here because the SEC requires us to make you aware that trading has its risk and that I'm not acting as a financial advisor or not giving you trade advice with the publication here. I'm sharing the trading systems, the entry, the exits, and I'm teaching how you can apply that for what you want to reach into the markets. Let me give you an executive summary of what you will experience in this presentation. So, first component, the long-term investor takes the highest risk, hence rather be a swing trader or day trader. That might be shocking for you, because from scratch on everybody is educated and polarized to be a long-term investor and thinks that's the best way and that's the way to do it to get out of the trade clean and to make money in the stock market or any other financial market. But I'll show you that that's not the case. You might have to rethink your strategy, and that also encourages you to learn to be a trader. That means don't stay in positions that long because it might not be beneficial for you. In addition, we want to show you here what are the key components for trading success. Those should be with you all the time, and it starts out, first of all, you have to have a high probability system. If you don't, you're in danger of losing all your monies. Yeah, and stay engaged. How can you constantly find reinvestment opportunities and put them into your trading system so that you constantly can reinvest your money? Feedback. How well are you doing? Yeah, where did you go with your trades? Did you follow the rules? How are you doing? So we go to this, how you can either do it on your own or how you can take feedback from a professional trader or professional educator in the market that can help you to come on board and understand where you have some flaws that you need to work on to move ahead to be the trader that you want to be. And risk management, very important. As a trader, we predict the outcome of the future, but we manage the risk. Good risk management is a key essential for everybody, and we will refer to that and show you some practice of what to do and how to apply key risk management into your trading for the better of you. Either if you go with our proposal, which we make here at the end for a NeverLossTrading system, or you just go on your own or with somebody else's. Still, those components are all essential for your trading success, and we are here to present that because we want you to succeed. Basically, we have 3 types of traders or investors. The first we look at is the long-term investor. And the long-term investor is very well suited using a weekly chart for making the decisions on. Yeah. So here you see a weekly NeverLossTrading top line chart, and you see here those components. Right up there it's a sell, and then that sell signal was confirmed by the next candle cutting under, and then we had one of those nice bearish cup moves to the downside, which you all learn in there. So then we tested the bottom twice and reverted. Yeah, another trade came onto the board, and from there we had a little short spiff. We didn't get that all home. This one was acknowledged, took a while, but also right now is coming to place. And this is how a long-term investor should orient themselves for. Yeah, it's not going to be day by day or looking at a very short time frame. You take a weekly chart, and from the weekly chart you make your decisions, and from those decisions you carry yourself forward. So what else is there? Definitely the swing trader. What's a swing trader taking? Takes a daily chart. Here you see again the top line chart for Amazon as we had it before. So here Amazon gap up, buy signal, confirmation of the buy signal, and again buy signal coming home. Nice bullish cup trade up, and all blue environment. Blue here stands for up environment, red stands for down environment. In the NeverLossTrading system we color the frame, which gives the price range where the price shall stay in. The red line is always the stop line, and here the stop line then is on the opposite side, and you see all the red environment going down. Yes, so until today where I do the recording. How did it work out? So good trade, good trade, good trade, good trade. Ooh, 4 good trades. Yes, that was good for a swing trader. Always up there you see what you're trading for. It might be a little tiny and small up here, but here we have a movement of about 2.6% return on cash per day. And so that each of those per trade, each of those components were recognized. The average time in the trade is 1 to 5 bars, maximum 10 bars. That's how that system works here. But anyhow, swing trader, daily charts, take your entry. Don't mix everything up. The daily and the hourly and all of this, no good. Stick to one chart, make your decisions from that chart, and that's it. Yeah, there you got your stop, there you got your entry, your exit. Your trading system has to give you that. So where do we stand? We looked at the long-term investor who looks at weekly. We looked at the swing trader who looks at daily. So what else is there? We surely have the day trader. Yeah. The day trader would look at the Amazon chart very differently. Here, what we did is a 10-minute chart. And so we're coming out here, so we get a couple of trades, boom, 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 they're all gone right. Then gapping down, not acknowledged, and there we got a couple of trades also going through. This one went wrong, but these two went good. So we have basically 5 trades. 1 went wrong, 4 went good. That's a pretty good environment for a day trader on a high probability systems. But who's better on? A long-term investor, swing trader, day trader. I gave it away in the introduction, but why? Why? So that's the key component that we want to answer tonight. Who of those is better on and why? To do so, let us find an evaluation system where we can say those are the key components, we compare those two. And what we want to use is a money flow model. But when we use a money flow model, who lets the money flow? Institutional investors. Yeah, and here on the table you see for the different institutional investment areas, we basically differentiate stock market, currency market, treasuries market, and commodities. Always prop traders, key institutions that trade their own money. They're the drivers. And then you have a lot of followers behind that carefully evaluate of what's going on. And that's the chance for us, private investors. When those jump on the bandwagon and decide they take the direction that was done by the trade initiators, the prop traders, then we have an environment that we love because we know money's going to flow in and we go with it, and money's going to flow out and we go with it too. So that also means we have to have 2 types of trading systems regardless of the account that we use. We need to be able to participate in up moves and participate in down moves. For calculating the return expectations, we made some measurements and said, okay, when institutional engagement happens on a weekly chart, for example, how far does it reach before then again selling or buying or an opposite price motion comes into place? And for the long-term investment chart, weekly chart, is an average about 3.5% price move on the base of the underlying assets. Swing traders on a daily chart see about 1.8% and day traders about 0.6%. When we say a trade environment can be that you need the same risk as reward, but the higher probability of your system carries you outwards, then we calculate and want to see how far does that go, how far does it reach, and how can we combine that knowledge within finding an evaluation scheme where we say on the individual component, here you see a daily chart where you have individual price triggers and entries. Yeah, so this one was a winner, came home. This one was a winner too. It's an HF chart, so therefore it is high frequency, allows you to participate very, very frequently in the market. But the key component in all of this is you want to have a system that has a setup above 65%. Because then when you trade on one-on-one, the odds are definitely on your favor. One-on-one means $1 risk for $1 reward or whatever that is at the key component. Then you know you will come out clean. Too many traders take too much of a risk or too little. Why too little? Too little risk is also very, very dangerous because it might lead you to make small gain, big loss. Why small gain, little risk? Because you get stopped out constantly, because you trail your stop, you don't risk enough to give the price the wiggle room to come to target. But however, let us move ahead and see in a calculation scheme of how that all works out. What you see on that table is the 3 different investors side by side. Let me take the little highlighter and then we'll see here. So you got your long-term investor, your swing trader, and your day trader. We always assume that we win 2 out of 3 trades that we engage in. And now we added the 3.5% return. Wow, it's big for a long-term investor, 1.8 and 0.6 for day trader, and that's based on a stock trade. I later on also give you an example about a futures trader, but here I want to keep it really simple and easy, based it all on a stock trader. So what does it mean? Average, when you are 3 bars in a trade, so 3 weeks in a trade. Then you are 15 days in a trade here, 15 trading days. You have 3 trading days in a trade here, and you have 1 trading day in here. Yeah, I just kept the weekends out, the weekend days out. So then you have capital turns in a 15-day period here. 1, there's 5, and there's 15. So when we take the average return expectation times the turns, then we have the following times the 66% probability for success. We come out that we expect a 2.3% net return out of long-term investment in 15 days, 5.9% as a swing trader trading on the daily chart, and the same, funny enough, a 5.9 for the day trader. But how does it look with risk? When we take the same risk as we had the reward, there you take a 3.5% risk as a long-term investor, 1.8 as a swing trader, and 0.6 as a short-term trader. Here comes it from, where I say, look, the risk a long-term investor takes is above and beyond its average expected result. So that's the only one which is below 100. The 2 others have a way above risk expectation when you see what return per risk unit is made. And this is why we definitely, for private investors, favor this one. Don't hold your assets so long, trade them, or if you hold them longer, add options to them to make additional income from the money that you put into the market. This calculation is all cash-based, so it means every dollar that you invest you have as cash in your account. However, if you use margin, it changes the scheme a little. And what we did here in that table here, so it changed slightly. We kept the same probability for success, but now we do a 2-to-1 margin in respect to long-term investment in swing trading and a 4-to-1 on day trading, and we deduct interest. So then the result by doing the same turns is way in favor of the day trader, because you see here close to a 20% return expectation over a 2% risk, and here you have a 4.5 return expectation on a long-term investor over 6.8% risk. Again, the negative relation because we are below 100, so that means we take a far above and beyond risk to our expected return. So careful with this one. Therefore, we have the title here in that presentation, rather learn to trade. It's never too late, because it'll bring you forward. Trading occurs in here in those 2 components, swing trading and day trading, because they help you moving ahead, not assuming so much risk, but constantly making turns in the market. And compounding interest is one of the biggest inventions of humankind. Knowing now that we propose to you to make more earns and turns, we want to look at what are the key components for trading success, because as more frequent you trade, as better you need to be in having everything in the right direction to participate greatly in what the markets are giving us. And the financial markets are so diverse, you'll always find a slot where money moves. So therefore we also encourage you to not just focus on a couple of assets, focus on a good, wide asset base so that you always can participate. Even so the markets go down at times, some elements go up, and if you know how to find them, you're much, much better on. And basically with the right scanners and everything we propose to you, you will be in a position to. So let's dive into how to evaluate and buffer a trading system to be good for you. So a trading system shall give you entries, exits, stops, reward, risk calculation and probabilities at any trade setup, because you need to know how to buy and what to buy, and how to sell and what to sell, to put that all in motion. We need the both strategy to trade to the upside and trade to the downside, because markets move in those wave patterns and we want to participate in both directions. In average, the markets drop about 6 times faster than they rise, and that helps us at times to adjust the time frame we trade with, and helps us to be on the right side of the market so the occurrence comes, meaning by picking the right time frame we base our trading decisions on. As a trader, you can choose between 3 different types of trading systems, and they all have their implication on what you can achieve with them. So first trading system to look at is moving average based trading system. So 2 moving averages they cross, and with that they define an entry or an exit for you, and to trade along with those crossings. They can also be in an RSI or in a MACD or used as stochastics. They always got these line crossings that tell you something, and you try to take the move in accordance with those, or you overlay a couple of those components, and with that you move ahead. Very basic, around for very, very many years. Yeah. Or you have prediction-based systems. So what I took here is an Elliott wave example, where you have the 1, 2, 3, 4, 5 wave and then the ABC wave that comes after. So you predict a certain trade pattern because you saw what happened in the past, and with that you try to replicate or predict what's going to happen in the future. Those systems are around 100 years basically. They're very common, and they are a way to go to market in comparison to the moving average based systems. We will all evaluate them and show you some statistics that we ran over the 30 years of being in the market, of how well they perform and what you can expect from them. Finally, newer development, activity based systems. They look at changes, in particular short-term changes in supply and demand, triggered by institutional investors, and from there give you an indication where the rise will go or where the fall will come from, so that you are early in a trade, define for a specific price move, leave the trade and find another trade after. In this chart here, we listed some of the key components and comparisons. Yeah, for example, if you have a moving average based system, so you find MACD, Bollinger Bands, stochastics, RSI, moving average crossings, here Elliott wave, Gantt squares, trade patterns, head and shoulder, flag patterns, all patterns people look at. Or you have here short-term activity-based, short-term changes in supply and demand that trigger what's going to come. So decision-based here is line crossings, conclusions here, D follows ABC, or that you saw you have the 1, 2, 3, 4, 5 wave, then the ABC wave gonna result out of it. Or here in the activity-based system, you have the crowd follow the leaders. Institutions make a motion, they jump on a move. The rest of the market definitely recognizes it, so when they acknowledge it by also buying or selling, then we are in the trade. We trade for a defined specific price motion, and then we are out of the trade again, waiting for the next. So we are riding the wave to the up and the downside. What we use here is an algorithmic based system that is either running on an own platform or that is running on open programmable platform like NeverLossTrading, which is running on Thinkorswim. And within that we give you the indicators or program them into your account so that you can see them and that you can act on the price moves that are out there. Yeah, so for here you have also individual trade setups, or you'll have just a general theory that you need to apply to the individual system. MACD, Bollinger Bands, stochastics, and RSI, they are available for free in most trading platforms, and you can just puzzle the chart together on your own. But the key is how probable are those for bringing success. And we made many statistics, because I can say on each and every of those systems we worked on prior to developing our own activity-based system. And here, for example, the moving average-based system has a probability for success of about 54% on average, yeah, between 53 and 55. I took the mean value here. Then you have here 53 to 57 on the prediction-based system to conclude the way they are. And high probable systems, they basically go at a 65% probability, and this is what we're going to work with, above 65, so we'll work with 66, not with the one that you have standing here. Making an investment decision for one or the other package of education to learn and apply it, there we need to see how fast will the return be and what will be the expected return in money. So to do that, we put some calculations together and said, okay, here, the education package which are using moving averages, they're selling about between $500 and $5,000. Prediction-based packages where you learn those between $2,000 and $5,000, and activity-based packages between $5,000 and $10,000. Or in any of them, we took a mean value. Yeah, average is 1,000 or mean is 1,000 for the moving average-based system. Education tuition fee 2,500 for prediction-based and about 10,000 for activity-based. Yeah, much higher components. But then when we see what does it mean if we hit at a 66% rate, or at a 55% rate, or at a 54% rate. What we did here also, we took a 1% slippage and commission in it, because we have to give a little on the bid and the ask to get filled. And putting that all together, what you see here is the average expected return on an annual basis of those systems, and immediately it'll pop to your eyes that the activity-based trading system based on the higher probability will give you more than a 3-time higher return if you are a long-term investor, a swing trader, or a day trader. Yeah, so the calculation scheme we set here, we applied here the probability for success minus, or I put 3% slippage, my apologies, that's a 1% slippage up here, and there from there the return expectation, and the same on the probability of failure, the risk expectation divided by capital, that gives you the return times the turns per year. For the calculation we took 250 trading days, and the average time in a trade for like 3 days, or 3 bars 1 day basically on a day trader, or like 3 weeks or 15 bars on a swing trader. So that's the calculation base of all of these, and you see immediately, wow, there is a big opportunity in an activity-based system, but on the other hand, it also has a much higher investment for you to take. How do those components all compare and come together? To do this calculation, so we captured over the key components from prior, yeah, so that's what you saw in a prior table here, so that's all the same. And now, and this one is a 1% slippage, yeah, so sometimes that occurs. And so now we'll say, okay, when we pay $1,000 in the first year of using the system, and then have our expected return on an investment of $50,000 of cash here for a stock trader, or $100,000 of margin. So therefore, after paying the tuition back, so that trader in his first year still has an expectation here, the long-term investor, of $2,500 on 50,000 margin, or on 100,000 cash. If the trader uses a prediction-based system where on average he spends $2,500, the return will be $2,000. And if you use an activity-based system where you upfront pay $10,000 down, but with the higher probability and with that the higher return, you'll make as a long-term investor in your first year 7,500, but as a swing trader 35,000, or as a day trader also 35,000 out of 50,000 cash, or $100,000 or 50,000 margin, or $100,000 of cash. That's a substantial return, and you'll see here in the second year then you don't have to pay for the tuition anymore to recuperate it. You have recuperated it again, but still this ratio of 3 times more is still inherent in that, and favoring big time that you work with an algorithmic based, activity based system that shows you on key components how real money flow works and moves, and you move along with it. Let us do the same for a futures trader, and here we invest $10,000 of cash and then use it either as a quarter margin. There's more favorable margin out there, but we would rather want it to be conservative in that, and having the same amount of spending in average, so $10,000 on the activity-based system, 2,500 or 2,000 on the predictive system, and moving average based 1,000. So what you see here is, even so we have that much higher spending, in the first year you have a substantial, again, 3 times more expected return because of the higher probability, and it's the same as a long-term investor, as a swing trader, or as a day trader. Here you have even more than about 4 times more income to expect from the same base of $10,000 if you trade futures as a day trader, because you can afford so many more contracts, and when you get 2 out of 3 trades right, the odds will definitely be in your favor to produce this. In the second year you don't have to pay your tuition again because it's paid for, and so then you'll make the full amount, and those are substantial numbers in comparison to those, again, more than 3 times higher return in the activity-based system than in the best setup of a moving average based or predictive based trading system for you to latch on with. In summary, if you want to be a successful trader, you need a high probability system. Why? A high probability system gives you 3 times more return than a lower probability system that is either moving average based or predictive based. the initial higher cost of an activity-based systems are easily overcompensated by the higher probability for success. And with that, basically, you cannot afford, if you want to be a successful trader, not having a high probability system you base your trades on. Think about it and put it as a key component, one way or the other, into your trade requirements and into your trading plan. Let me share some of the activity-based principles of NeverLossTrading with you. So first of all, who initiates the trade? Prop traders. Yeah, the proprietary traders, they start to make a motion, and that motion brings the price of an asset outside the first initial stage of a price move. Yeah, so either to the upside or to the downside. When then that price threshold gets surpassed by other followers jumping on the boat, we get our signal here. There's the signal. Then we trade, and by the algorithm that we calculate, and I'll show you that in a minute, we'll make a one spool move, yeah, at least to the upside, because our computers and our algorithms calculate what will be the minimum move, and either after that minimum move we get out, or we trail our stop to move further ahead with the trade, or we wait for a re-entry. There's multiple strategies that we teach. Important is, first of all, prices accumulate, then they break out of a certain price zone. Key market participants recognize it. If they jump on the bandwagon, we jump on the bandwagon with them. We trade for a one spool move and we'll take profit. Very, very essential. Constantly taking profit will always be the name of the game, and compounding interest. Here, the principle that we follow, yeah, institutional leaders, they make a motion, gets recognized, then we move. There you see it, how those components are initiated on the chart. Yeah, so you see here win, win, win. So those are trades from the NLT HF chart, where you have a proposed entry, like here on this one, proposed entry if the price is above it. Yeah, it's above it. Then we'll trade to here, we'll take our profit. Oh, that was a win tool. Price comes here, next candle ticks it out, we'll take profit. And so this is where we constantly go through. That was a no trade on here. Why? Price initiation on the upside, but the price of the next candle never got there, so we don't have to worry about it. We can just take it and move in the next direction with the winning trade that came on the other side. So constant participation and following price direction by those moves is a wonderful strategy that keeps you in a trade when you are a swing trader for 1 to 5 bars, maximum 10 bars, that's days then. Or if you are a day trader, depending on the time frame you choose, you anyhow close your trade at the end of the day. And with the time frame you choose, you have different ways of making money and making returns. As you saw in the prior chart, a key component of our system is the SPU, yeah? Speed unit. So that defines, after institutional engagement, how far is the minimum price move to be expected in the direction either to the upside or to the downside after trade initiation. And so with that, you're always in a component where you see, okay, that's the SPU move, and on the top corner of the chart, on the top left corner, you always see how much cash return does it give you. And so then if you are using margin, you can either double or quadruple it, and then you know the initial reward you're trading for, and by the stop being on the chart on the red line, you immediately can put risk reward and the odds of the setup, which you will learn in the mentorship, together for making a decision. And we also have calculation schemes where you just need to plug in the numbers and pick the signal which you're trading from, and you get all the answers. So we'll make it simple for you, but important, the SPU gives you the price move per time unit observed at every time unit, be it a week, be it a day, be an hour, be it 10 minutes. Whatever you choose it to be, there you will always know how far will the price expand at minimum, and giving you with that a very sound trade environment to base your decisions on. This is how it looks on the chart. What you see here is the NeverLossTrading top line chart. And so you see here with the numbers, there was a trade initiated by two signals even, end of purple zone signal and the red signal with a light tower, we call a power tower signal of top line. And then it also formulated, okay, here are my exits for the trade. So you knew, okay, that's my stop of the trade, here my exit, so you have about a one-on-one trade, and your expectation was to be 5 bars in the trade. Next bar ticked it out, acknowledged it, 1, 2, 3, 4 days in a trade and you're out. Wonderful. Yeah, so then we have a turnaround situation, kind of double bottom here. So then turn around on a favorable signal. And here we have no dot on the chart because in that case we trade to one of our key lines. It's called NLT box lines. So you see here, that's where the target is. So there we had very little risk in this one and a very nice reward all the way to target. And we took it. Or what you also can do, you can trail your trade with the red line staying right under. And so we never were infringed on that up move, neither were we on a down move. Yeah, so then comes the next trade here, favorable trade setup, bigger target than the risk we take on that trade, and again came to target in 1, 2, 3 trades after, and we left the trade making a sound return, each time about 2.5%, here even 5% return on the investment with very, very little risk. This is high probability trading, how we try to put it on a chart for you and how we want to invite you in it to learn this one for your trading success. That's another example of the same type of indicators, yeah, telling you at the key price points, like over here, there is something happening and money flows out of this asset, yeah, so it flows out and it goes down and see a high red environment, little cup, and then we are falling down. So there was red environment giving us nice opportunities on shorts, and on those components we trade too. They're called cyan arrow trades. We just didn't spell out a price threshold, but when you come on board we'll teach you all of how that's done. That was not a trade because this candle didn't go lower. Yeah, but here on the opposite price move, then we found a bottom. Yeah, then everybody covers. We want to be part of the game because we get ticked out. Our stops up here. And then we're going to be able to trade it all the way to the upside. So we have multiple opportunities that we can take in different directions, and we show you how to do that. But also, if you don't like the NeverLossTrading program, go with somebody that proposes to you instruments for both directions and instruments that go with money flow, because you see the high predictability and the high probability of activity-based trading system, it reaches by far beyond predictive systems or moving average-based systems. Let us move ahead and come to the next component. How do you stay engaged in the market? Unfortunately or fortunately, however we look at it, we have very many opportunities to choose from. Yeah, 40,000 stocks, 3,500 ETFs, 200 futures, and 78 forex pairs. How do you find the ones you want to invest in? And why is it so important? Because you know, if you trade shorter term, if you're out of your trade every 5 days, you need to find a new opportunity to invest your money in to make those turns so that you come to those favorable goals for the year. Your money needs to be engaged. And that's a tough challenge for most of the investors and the traders. So how do you find your trading opportunities? Somehow, to stay engaged, you need to find constant trading opportunities, and you have basically 3 different ways of selecting that. Either you have a selected set of assets and you look at hundreds of charts every night, like all the S&P 100, that would be a base, but you need to look at 100 charts and see if they match, or the NASDAQ 100, or both of them together, 200 charts per night. You go through and you find those that have a favorable setup, and then next day you need to see if they trigger. Another alternative is like you use an own analysis tool, like you get it with the NeverLossTrading top line, where you can scan the markets by any component, seeing which stocks have favorable price moves, and then they get printed for you on a heartbeat, yeah, in the next second, and then from there you can go put together your watch lists. And those who subscribe to NeverLossTrading, on those watch lists you have a trigger, and you see immediately next day it populates the list which one you need to look at and where you have your trading opportunities, and the others you just can neglect. Or what you also can do, you subscribe to our service, NeverLossTrading Alerts. You're getting great detail laid out for every individual asset that we observe, what the current situation is, where the trade entry is, where the trade exit is, what the return on investment is going to be, and if you trade an option, the maximum you pay for certain options based on time to expiration. How does it all look like, and how should, if you subscribe to a third-party service, your information base look like? Let us compare it with the NeverLossTrading input. So here you see multiple assets listed, and those assets listed then have an indication if they're bullish or bearish. Yes, this one was a bear, the others were a bull. And then there's an evaluation for the trade setup. You have approved, favorable, acceptable. The favorables are the ones with the higher probability for making more money. And then you get some key information on their PE ratio, on the put-call ratio, and so on. Time will not be enough to go through all of these, but that's not enough on that. We'll go deeper. We then look at the key components from the NeverLossTrading systems. What was the movement? Did it go up and down? Which indicator triggered? How much volume was in there? And how was the actual move? And how did the actual move compare to the overall move? And then we go into the details. Then you see here last price, critical price point, critical move to the price point, and goes through, and you see here, oh wow, that was considered risky, but we made a little adjuster to it. We allowed it because there could be a stop put at a different section of the candle, and you only see that when you have basically the subscription to the referring mentorship. But let's look at these favorable components down here. There you see, okay, my key setup was, there was a long 43.17, was the last entry critical point at 43.47, entry at 49, and from there, if you got it right, you have a 1 to 0.9 favorable setup, so you have a higher reward than the risk if the trade comes through, and you're basically trading for 2.8% return, risking 2.6% of your initial capital. So that's a good trade to have, and that's how it's all laid out. And in case you decided to trade the option of this, here it would be a call option. You know, if it's above 30 days, do me a favor, don't pay more than 145 for that option. If it's around 20 days what you want to trade, don't pay more than $1. And this even has a weekly option, so you can even participate in a very short-term time frame, while we mostly use those for day trading, because you have to consider on a weekly option you lose 20% of time decay every day. But here you see very comprehensive data. Regardless of whom you use for subscription, you need a lot of detail and background about the stocks to make a good pick and to trade along with the institutional money moves with clearly defined entries, exits and stop, and clearly defined reward and risk ratios. As a trader, you're on your own. You need a feedback. To everybody to get better, we need a feedback, because we need to know how we perform. Yeah, do we take the entries right, the exits right? How is our trade executions? Do we make enough money when we're good? And do we not risk more than we should risk on certain situations? You can surely put your points of reference, but that's needed, or you'll find somebody helping you, and that's, for example, also offered in the service of NeverLossTrading. Therefore, we have a 6-month mentorship where you can send in your trades and you get a constant feedback on them. Good entry, bad entry, what you do, where was your stop, was it right? Or sometimes the thing just doesn't go our way because we're never 100% right. So within that, you get confirmation on leading guidelines, your comparative how you do in comparison to others, you get clear hints for improvements, you get a coaching program, and also we're working together how you can keep your own scorecard, that you see, okay, how well did I do in long trades, in short trades, what are my critical issues, do I force trades or do I trade when the market is ready for me? All of that somewhere needs to be in your trading system, because if you're not constantly on a scorecard, look how well you do, you never perform to the performance rate you should. And so therefore we implement that, but also we recommend you, if you want to work on your own or with somebody else, have this component in place and move ahead with it. This is an example about a feedback that was given just yesterday to a NeverLossTrading student, and so the budget for the day was actually $200 that he should achieve within trading futures. And so you see here in those two trades together, he made about $400, and then he was asking, hey, they rose well, shall I continue trading or shall I stop? And so here was the feedback to the trades. Here was a long trade on bonds, nice breakout, stop and everything done right, and here a nice breakdown on the ES. He caught them both. Yeah, so feedback, nice long and breakout on bonds. To his question, shall I stop now? Yeah, the market was at a place where it halters because it came all the way down to yesterday's low. If it breaks through that, then we'll trade, but at the moment it looked like we're going to have a longer period of time that it sits down there. That's exactly what happened, so therefore he could take off for the day, do something else and nice, and had made double his budget for this day. But that's a positive feedback. But a couple of days prior I had talked to him because it was forcing trades, and within forcing trades I had to tell, please Don't force the trades. If you have no trade a day, that's good, because then you were not putting your money at risk. We're not going to work. We are waiting for favorable trade situations. When they are there, we put our money at risk and we'll make money with them. If there is no trading opportunities, we put money at risk without an expectation of a reward. That's not a good trade, so we rather stay out. Let us come to the next key component, risk management. Risk management is essential, and this is where most trading systems come short. They never calculate an odds ratio, and here the odds ratio has to be above 1.5. And I'll show you briefly how it's done. When you know your probability of success of a trade setup, and you multiply it by the reward and you divide it by the probability of losing times the risk you have. If that component is constantly above 1.5, you trade with the odds in your favor. And that's very, very essential. We make a prediction for the future outcome, but we control the risk to a good degree, in particular when trading futures, because there's never a gap, but also when we trade meaningful stocks and we stay out of trades at earnings or at news announcements, we can pretty much control how much we risk in a trade. In support of our traders, we put together that table here where you just have to fill in a couple of little components. So like what's your trade direction? So you select, so your trade direction is up. What are you trading? Here's a stock BBD. Which signal are you trading off? Here we selected a dark green signal, that's an HF signal. So one spool measure, so you put in there because you take it from the chart. You put your entry price, you put your target price, and you saw prior we had that even spelled out on our little table for the NLT alerts, and your stop price. And all the rest is calculated here for you. So what does it tell you? It tells you even here, so your odds ratio is 2.4 to 1. What did you learn prior? It has to be above 1.5 to trade, so that's good. So it recommends us to give 2 lots. If we have a capital of 50,000 and we assume that we hold 10 positions, so then it gives us an indication that at this trade we could use $10,000 investment, basically buy 334 stocks, expect a 3.3% return, and have a 2.6% risk. When we trade or wanted to trade a call option in that, because we trade to the upside, the same evaluation is made. We're slightly above our 1.5 goal, so they say maximum you use half lot if you even trade. So with that, you see those components should be in your trading repertoire, and if they are not, you need to either build them up or find somebody like NeverLossTrading who puts them in there, because those are essential decisions. You want to go base by base when the opportunity is little. You want to go for a home run if the opportunity is huge. Here it's in between, it's favorable, but that's what you want to know by putting in those components and by making a clear odds evaluation of every trade. Now comes the key question. When you see all those components that reach from having a good system in place to risk management, so what we're going right now through, do you want to all establish that on your own? Or do you want to trust in a market established mentorship that helped many to perform to their best? So we have different mentorships with NeverLossTrading, suited and always tailor-made to you as an individual, because nobody comes with the same risk tolerance and the same tolerance for the different type of trades. And with that, we'll support you to the most and help you to move forward in your trading by offering you tailor-made suits on different program levels. For the frequent trader, for the trader who wants to have the scanners, be very independent, for the entry-level algorithmic trader. So all these components are offered to you in mentorship programs, where you always have individual training suited to your needs, where we also develop a business plan with you. All components are server-based, so that means you ever buy a new computer, everything will be there because it's on a trading platform for you. You don't have to change broker relationships. You look at our charts, you keep your current broker relationship, while we have a very good relation to the ones where we program everything in, and so therefore you can surely open also an account there, but we are independent from them. There's no relation on this one that you have to move assets from left to right to trade with NeverLossTrading. All the data are real time, accessible to you from every point where you have high-speed internet. Entries, exits, all on the chart. Position sizing model, as I've shown you, is given to you, so that helps you to make that decision. The time in the trade, 1 to 5 bars, average maybe 3, maximum 10, so you know all that. Clear risk approximation, because we do that for our odds approximation. So all of these comes together for you in a comprehensive program of 20 hours of individual training, and then from there forward in a 6 months period of coaching sessions where you can send in your trades and we constantly give you feedback on those, and when you need us, we're always there. There is not one person so far that you found online saying something bad about NeverLossTrading. We're in business since 2008. Yeah, so here's a small component of somebody who made really well, because he made basically with a couple of trades the entire tuition for HF back, and he had a super duper day that day trading futures on a 10-minute chart. He had crude oil, and he got another so many ticks. It was just beautiful and helped the gentleman to get his goals for his life established. Yeah, so we have many of those. Usually we don't publish them, and indeed we never publish them with the name, because we always keep a lot of privacy to those who run with the NeverLossTrading program. Here's how it works again on the chart. You see here 7 positive trades, 1 failure. So here the trades get initiated by a signal. Yeah, the signal comes forward, gets acknowledged. Yeah, so like here, signal is acknowledged, signal comes home two steps later, only when the component is there. So here it was a long component because we trade them all the way up here. So that was a huge price move we captured. Here a couple of shorter ones. Yeah, so 1, 2, 3, and so you see here how we came to 7 positive trades on a high frequency trader. Here the component was the 30-year bond. So every little ticky here is $31.25. So you're also trading for money just with one contract, while your holding power is only about $1,500 to make the trade. If you go full margin, if you go adjusted margin, it's even more favorable. So you see it works for stocks, it works for futures. Definitely we trade options with the system, and surely also Forex. Yeah. Here's an example for stock market index that we traded with an entry-level system, which is called Wealth Builder. Yeah, so we have a special offer later on for you on the Wealth Builder system, and you saw also there we had 6 positive trades and 2 losses. So, but this gives us a very high probability for coming out positive from those trades, because then you have 4 winners net that definitely gets you in a good area of making profit and moving ahead. So where do we go from here? Yeah, so the key question will be, are you ready for our NeverLossTrading mentorship, where all those key components are catered to you? The individual training, the business planning session, the scanners, also the trade reports or the alerts that we give to you to make you that consistent trader you want to be, and to strive for money. And you saw what's possible within using and utilizing a high probability trading system for going ahead. So that's the question we leave with you. Are you ready for that? In any case, go ahead and establish those components that we shared with you, because they will be a key guarantee for your trading success regardless of what system you use. But then what can we offer you? So let's make you an offer. So here are 3 systems that we put on the chart. The Wealth Builder and Income Generator we just overworked, so therefore we have a special pricing. All the others are on regular pricing because we are not selling discounts. We are selling high probability trading system that should give you a fantastic return on what you invest in. Yeah, so the component for top line, which has everything, the scanners, the individual training, high component setups, high probability trades, comes for $9,997. HF stock trading or HF day trading, the same component, often liked by futures traders because they can focus on a smaller set of products, not in the need for scanners. $8,997, and our special offer for Wealth Builder or Income Generator, $5,500 instead of $6,997. Look at it, come to us, we'll be happy to entertain 1-hour live session with you where you can see how these systems work, where we can count good trades and bad trades, and that you see that we are coming above and beyond the expectation rate that we spelled out in here. You will see it. You can call the asset that you want to look at, and we'll prove it live to you. So we are looking forward to hearing back from you. Again, our offer here, special offer for those components, all the others. Our spots are always limited because we are dealing individually with people. We work with you, we look at who you are, what you know, and then suit the system and your business planning session right to you so that you can follow through with that. You can call us at 866-455-5520 for scheduling an appointment for an individual hour, or write us an email to contact@NeverLossTrading.com. Thank you very much for your attention. We are looking forward working with you. Bye-bye.